you can deduct again your home interest, your property taxes. You get to double dip. A minister gets a double dip.
Yes and amen.
It's so great. And so this is what is not easy to understand, but when you get it, and you have to know how to do it right. Because if you do it wrong and you underestimate your tax liability by 25% or greater, there's this thing called statute of limitations. It never goes away. And so the IRS can literally go back as far as they want. Now, sometimes people say, oh, there's statute of limitations. It's actually on after the third year of the prepared return. But if you underestimate your tax liability, meaning you should have paid more, but you didn't, by 25% or greater, they can go back as far as they want. We've literally had pastors in our office where the IRS has gone back 30 years and gotten their taxes that were owed.
Welcome back to the Church Advisory Podcast, where we empower church leaders to wisely steward their financial resources. In this episode, I'm joined by Steve Cheney, and we are talking about housing allowance.
That is right, housing allowance. The equivalent of no tax on tips for ministers.
Ooh, no tax on tips.
That's amazing.
You think that's going to happen?
I think so.
Think he's going to push it through?
Oh, for sure. He has to. Even the Democrats want it.
It's true. You know, as I was thinking about this is kind of like our podcast is kind of like MAGA.
That's true.
For churches. We're making accounting great again.
Whoa, I like that. What did you just say?
MAGA.
MAGA?
Let's make it great again, baby.
Make it great again.
I love it. Well, in this episode, like I mentioned, we're talking about housing allowance. And in our practice, it's one of the things that comes up all the time. Matter of fact, I had probably 3 conversations this morning about housing allowance, how it impacts ministers, when it's appropriate, when it's not appropriate. And so let's jump right in. So, Steve, you've been obviously working with churches for years and years and years. And so would you just kind of kick us off with what is housing allowance at the highest level?
Yes. Well, the Internal Revenue Code many, many years ago allowed a minister to not be taxed on the portion of his salary that is allocable to housing costs and expenses. Okay. And ultimately, that's not to get too granular, but that's in Code Section 107 of the Internal Revenue Code, and it only applies to a minister of the gospel. So you have to be able to do what they call the sacerdotal duties. You have to be able to marry, bury, preach, teach, do communion, things of this sort. There's quite a few of those functions that you can do. But ultimately, the IRS allows you to allocate a portion of your salary towards housing expenses. And that portion becomes non-taxable, and they call it housing allowance.
So when you say non-taxable, talk about how it's non-taxable. Does that apply to all taxes? Is that a specific portion of taxes? When we say non-taxable, what does that mean?
For sure. Great question. So in any tax world, for payroll tax, there's 2 types of taxation. A minister is considered dual status. So for your state law, you can be an employee. If that's the case, you file a W-2. And the taxes on that are twofold. It's ordinary income tax and it's self-employment tax, ultimately, because a minister is considered self-employed. They're dual status. And so housing allowance is only tax-free or non-taxable on the ordinary income tax. But a minister still has to pay self-employment tax, which for a normal employee, like a non-minister, self-employment tax is what is referred to as Social Security and Medicare. The employer pays half Social Security and Medicare. The employee pays the other half. When you're self-employed, you pay both halves, and then that's applicable to a minister. They pay both sides because they're self-employed. But housing allowance does not apply to ordinary income tax as long as you meet the rules.
And that's at the state and federal level, correct?
Definitely the federal level, and it depends on which state. So in California, it does apply. That's where our offices are. But we have, obviously ministers all over the United States. So if you go to Pennsylvania, there's 3 different types of rules that happen. So you have to look at the state, the locality, the township sometimes, the local school district tax. It gets quite complicated. And you want to make sure that you definitely are talking to a tax professional as to what applies.
Yeah, that's good. So housing allowance, just very, very broadly, allows a minister to allocate a portion of their compensation toward housing or housing-related expenses, and that portion is typically, does depend, but typically not taxed for income tax purposes at the federal or state level. Now, sometimes at the state level, but typically it's not. Would that be a correct statement?
That is correct.
So that's kind of a broad brushstroke across what housing allowance typically is. Could you just give us a quick background into how housing allowance came to be? Like, how did we get here?
Yeah. So housing allowance ultimately, 100 years ago, 1921 is actually when housing allowance first became available in the Internal Revenue Code, Section 107. And the interesting side note to anything with the tax world is anything that is gained to you is taxable unless there's an exception out of it. And that was added into the code. They started adding code sections. So the code section 100 series is about income or exclusions from income. That's 107. And ultimately, that continued on for years and years and years. And then after Franklin Delano Roosevelt, they put in, obviously, Social Security and Medicare tax. And the IRS caught up with people who take a vow of poverty, like the Catholic Church, right?
Like a nun, a priest.
Exactly.
Like
They're getting like a benefit for living on the campus, and the IRS tried to tax that for self-employment tax. They said you're exempt from ordinary income tax, but you owe self-employment tax, this idea of being self-employed. And that was part of a change in the early 50s that they said now you can elect out of self-employment tax, which is really another topic that we'll cover in another podcast. But ultimately, in this regard, both the self-employment tax applies and the ordinary income tax does not apply for taxation. Now, the other thing is there's three-pronged test. It used to be a two-pronged test. It used to be said, what were you actually paid for housing allowance? And then what was also designated. It had to be the lesser of one of those, right? So you could designate as much as you want as housing allowance, but if you're only paid so much of housing allowance, you had to take the lesser of those, okay? So a lot of ministers started electing 100% of their salary, which is fine. You can do that. There's other tests that you have to apply for. If it's like reasonable compensation, things of this sort. We can get into a real rabbit trail there. We won't. But ultimately, that was challenged in 2000 timeframe. And in 2002, George W. Bush signed into law a third-pronged test where he said, not only is it how much you're paid for housing allowance, it's the lesser of three things. It's what you're paid, what you've allocated, or what is the fair market rental value of the house that you are providing or that you are receiving or paying for, let's say, plus the included utilities and like furniture and upkeep, things of that sort. So now it's the three-pronged test, and that has really been sort of the law of the land since 2002.
So if I'm a minister who is maybe brand new to housing allowance, or maybe you've been processing or getting paid a housing allowance for years and years and years, how can that person make sure that they're taking advantage of this benefit to the fullest extent? So if you're sitting down with a pastor and they're asking, okay, what can I include in my housing allowance, right? Is it just my rent or mortgage payment, or are there other things that a minister could include in that? If you're talking with somebody, what would your advice be to think through about including or not including?
Yeah. So ultimately, when we sit down, first, if you own the home, if the minister owns a home, they need to, first of all, set up sort of a schedule of what their housing expenses will be, like the mortgage payment, which is include principal and interest. That's the full mortgage payment. Property tax, the monthly utility bill, the monthly garbage bill, the water bill, the phone bill, maintenance, allocation of furniture. And that's what you actually spend. It's real cash. And so then you would allocate a part of your salary, or maybe sometimes it could be all of your salary. It depends. You could make a lower salary. And you say, I want it to be all housing allowance, or I want it to be this portion of housing allowance. Now, the key takeaway from that is you have to allocate it. You cannot go backwards. You can only go forward. So when you put that in place, that housing allowance and the listing, then you have to take that to your church board, church leadership, and they have to receive it. So the church has to say, we receive this designation as housing allowance and approve it. Doesn't mean it changes your salary. It just means how we treat your salary, okay? Once the board receives it, the church leadership receives and approves that allowance and that request, then from that point forward, you can start getting housing allowance on your payroll, and that's what you want to do. Now, if you rent a house, same exact thing, except it's not a mortgage payment. You don't pay property tax, you just pay rent. So it looks a little bit different, but some of the same things apply, right? Utilities, phone bill. Everything that upkeep that house is included in that housing allowance.
So you mentioned housing allowance can only be forward-looking. We can't go retroactively apply it. So does that mean I have to do that right at the beginning of the year? Can you do that during the year? Let's say you become ordained in July. Do you have to wait till the following January, or can this be done mid-year as long as it's forward-looking?
Yeah. So that's great. When we first started, we said that it only applies to preachers or ministers of the gospel. Mm-hmm. So what's a minister? You can have a local license from a local church. You can have a national license. You can be commissioned. You can be ordained. There's many types of ministers, right? Different levels. And so when a person does receive any of those type of licensures or any of types of certifications, that's the date certain. From that day forward, you can elect to have housing allowance. Now, let's say that you were received your certification to be a minister in your license January 1st, but you forgot to fill out a form, and there's really no designated form. It's just you could actually write it on a piece of paper, give it to your board, and have them approve it. Let's say that a minister forgot to do that. And they get to the end of the year, December. So they were licensed in January. They get to the end of December and they say, oh, I forgot to do this. You cannot go backwards. That board in their minutes need to show that they received it on the day that they say they received it. So if they did it in the year of in the month of December for that year, that minister lost out on 11 months of housing allowance when they should have received that. So it's important to get it done. It's important to have it done for the first year, but you can also do it mid-year. So if the person received their license on July 1st, then from July 1st, as long as the board received that housing allowance request and approved it, from July 1st forward, they would get housing allowance.
One, I guess, practical thing that I've seen ministers also do is, let's say somebody was getting ready to buy a house, but they weren't sure when they were going to purchase the house. And let's say it's September, October, or midway through the year, a house comes available. Well, from what I understand, and correct me if I'm wrong, but you can also allocate your down payment toward your housing allowance. Is that correct?
That is true, but the caveat is the three-pronged test. Mm-hmm. So you can count your entire not only down payment, the whole. Let's just say you outright purchase it, but it's the lesser of. So let's say with your down payment and everything, your housing allowance is $30,000 with the down payment, because down payments are high, right? A lot of money. But the fair market rental value of the home that you bought from September through December, let's say it's only $15,000.
Gotcha.
You only get the lesser. So
Gotcha.
they could only exclude $15,000, not the $30,000 in that example.
But in that example, you could amend it. Let's say your housing allowance was $10,000 at the beginning of the year. You could amend your housing allowance form midway through the year, as long as it's approved by the board.
Correct. So yeah, like you're renting a house from January, or an apartment, let's just say January through September. You know you're going to buy something sometime. You get it adjusted. You buy that house September 1st. Redo it. You can change it every month if you want, if the board will allow you.
So as long as the board allows it, I think as you're filling out that form, one of the takeaways there is if you're doing this for the first time or you're re-upping this as you enter into the new year. I mean, it's really anything from your rent or your mortgage payment down to the cleaning supplies and weed eater string that you're purchasing to take care of your lawn. Anything that can go into the daily maintenance of your home, along with things like down payments. And what about like roof? Like, got to replace your roof. You got to fix the dishwasher, utility, like major appliances. Do those count as well?
Correct. Any type of furniture, anything for the home.
The more I talk about it, the more I wish I got a housing allowance, Steve.
That's true.
Come on, no tax on tips. All right. So what I thought would be helpful is if we went through a practical example. And so if you're listening, we'll have this on YouTube where you can see our beautiful faces, but you also can follow along. We'll timestamp it so you can skip right to this example. But I thought just to really give a practical how-to, why don't we take an example person? Let's walk through, let's say they made $50,000, $60,000 a year. How would you go about breaking out a housing allowance? What would you include? What would you not include? And how do you go about filling this thing out?
Sounds good. Let's do that.
So let's go ahead and jump into a practical example. Steve, you want to run through that for us?
Wonderful. Well, what we did here was put together just sort of a very basic example of a minister who has an annual salary breakdown of $60,000. What he's done is he's elected to ask that part of his salary be allocated towards housing. So in this example, what we're going to say is it's $20,000. Now, the total accounting of his costs for the year is what we're going to say is $18,000. Okay, that's the actual housing expenses. So he's designated 20. His rent or mortgage, utilities, phone, maintenance, all the related costs are going to say it adds up to $18,000 in this example. And then we're going to say the fair market rental value of the home, including utilities, is estimated to be $19,000. Okay, so that's the three prongs. We have the rental value, $19,000. We've got the actual cost, $18,000. That's what he actually spent out of his funds, and then he designated 20. Okay. Now we have to analyze this. So we have to look at what is the limit? What's the amount that we can actually exclude from our income? What's the income? Total of 60, right? Mm-hmm. So designated 20, actual expense of 18, estimated fair market value of 19,000. So what can we exclude from taxable income? The lesser of those three numbers, which is the actual 18,000. Pretty simple, right? But that fair market value can get a little tricky once in a while because it's like, well, what is it worth, right? So what we would do in that is we would look for a house sort of similar size, similar square footage, and then just take all the actual expenses that you actually expense for utilities and other upkeep, right? And just take that rent and include it on there.
Now, when we're talking about fair market value, now you said it's the lesser of the two.
Lesser of.
Correct?
Mm-hmm.
So if you happen to be paying more in rent than the fair market value, you are beholden to the lesser amount.
Yep, it'll be lesser. And when they say the fair market rental value, fair means what two parties that are not related would do. They call that an arm's length transaction. It means they're not going to let you make up numbers. It's going to be what a person who is totally unbiased would rent it to another person who has no connection to them, right? So in this example, what we're going to say is the total expenses are less, right? Mm-hmm. And can I say that's the best thing you probably want to do? You always want to estimate more in some regards because you never want to limit yourself. Boy, wouldn't it be horrible if they only designated $15,000 in this example? and then they were limited to 15,000 because it's less than 18, it's less than 19, that would be horrible. So you always want to estimate a little bit more because you just don't know what's going to happen, right? Inflation happens, utilities go up 11%, whatever it is, that kind of stuff. Right?
And like we were talking about earlier, your refrigerator might go out.
Exactly.
And that could be included in the designated amount.
Correct. So that's important. So what happens here? There's 3 really steps to do. Now, this is something a tax preparer should be doing for you, a friend who knows ministerial taxes. Not everybody knows how to do a tax return for a minister. This, what we're going to talk about here, is only for ordinary income tax. This example does not apply. Well, we didn't show you the portion for self-employment tax. Self-employment tax does apply to this situation, but we're just not showing it here.
Correct. Which that's a whole
other issue.
Podcast in and of itself, which we'll definitely jump into.
Yeah. So there's nothing easy about ministerial income taxation. Mm-hmm. So number 1, the first question is, what is your annual salary? Well, the annual salary is $60,000. So remember what I said at the very beginning of this? All income is taxable to the IRS, right? This story that I received when I was getting my master's degree in taxation is if you're in your backyard and you're planting an apple tree and you hit a can of gold coins, is that taxable or not? The answer is it is, because that's an increase to you. The IRS wants their portion of the gold as well. Mm-hmm. In a minister's world, when you get a love offering, is it taxable? Absolutely, it's taxable because the IRS wants their own love. So anyways, that's what you got to figure out here. What is my income? Now, out of that income, what did we do? We defined our housing allowance. We already went through the example in the prior slide of this, that excludable housing allowance for this one example was $18,000. So what does that mean? Now we get to subtract $18,000 from our taxable income for ordinary income tax. So $60,000 minus $18,000, you have $42,000 of taxable income. And then, of course, your deductions come off of that. And we won't get too much into a 1040 preparation for federal taxation, but you can deduct, again, your home interest, your property taxes. You get to double dip. A minister gets a double dip.
Yes and amen.
It's so great. And so this is what is not easy to understand, but when you get it, you get it. And you have to know how to do it right. Because if you do it wrong, and you underestimate your tax liability by 25% or greater, there's this thing called statute of limitations. It never goes away. And so the IRS can literally go back as far as they want. Now, sometimes people say, oh, there's statute of limitations. It's actually on after the third year of the prepared return. But if you underestimate your tax liability, meaning you should have paid more, but you didn't, by 25% or greater, they can go back as far as they want. We've literally had pastors in our office where the IRS has gone back 30 years and gotten their taxes that were owed. So it's very important to get this calculation right. It's not easy, and it's not something that you should expect a software off of the shelf or somewhere you log online and they say, we can do your taxes. They know what they're doing. We have many examples, and I will not tell you the providers that have done it, but it's quite extensive.
And to that point, I think it's important to just remind, our pastors, our ministers, that it's definitely advisable to work with a tax professional, but make sure that tax professional knows their stuff, knows what they're talking about when it comes to pastoral taxation. Because we've seen an untold number of pastors come through with taxes prepared by licensed tax preparers or even CPAs, and they've been totally wrong.
100%.
Totally wrong. One question I had here as you were walking through it. So I know for a lot of our ministers that we're running payroll for, in this example, we're going to be, if they say, hey, I want to allocate $20,000 as housing allowance at the beginning of the year, we'll start paying them $60,000, $20,000. We'll take that. $60,000 and $40,000 to make up their. I'm all over the place.
Let's get that one.
$40,000 of salary.
20,000
of housing allowance
for a total of 60.
We're on Struggle Street. You
That's
can tell
okay.
that I'm not the CPA in this conversation. So 2 plus 4 is 6. I've got that one down, right? So 20,000 of housing, 40 of salary to make up my 60 of total comp, right? But in this situation, we get to the end of the year and the minister realizes after I added everything up, actually I can only claim 18. But when we provided their W-2, they're going to have 40,000 of box 1 income, and they're going to have another 20 sitting over there in box 14.
Correct.
What does that minister do with that?
So there's a $2,000 difference, right?
$2,000 difference.
So what you do, and this is going to get extremely granular, but on a ordinary income tax return on 1040, page 1, on the other income line, they're going to say section 107 inclusion, and they're going to add in $2,000 of income to get that up to 42,000. So the regular portion on this example is box 1. It's $40,000, right? Mm-hmm. They need $2,000 more of taxable income. That's the way you do it. You just put it as miscellaneous income on the 1040, and you just add it in, the difference, the 2,000. You can't just say, well, I don't know what to do with it, so it doesn't go anywhere. You have to add it in.
So long story short, make sure that your tax preparer knows how to file taxes specifically for ministers.
Yeah. And if a tax preparer, here's a question you can ask that will tell you straight up if your tax preparer knows what they're doing or not. If you're a minister and you ask your tax preparer, is housing allowance not taxable? And if the tax preparer says to you, no, housing allowance is not taxable, you probably should not go to that tax preparer. Because the right answer is, it is taxable for self-employment tax, but it's not taxable for ordinary income tax. So I will tell you 95% of the errors that I find with housing allowance is not that they didn't get the three-pronged test correct, because that's pretty minimal, okay? Really it is. Most people get that pretty right. It's the self-employment portion of tax. And we're going to have a special, another podcast on that to define what that looks like. But that is the biggest thing where a minister gets hurt. And the tax preparer, we've actually got the tax preparers on the phone for ministers sitting in my office, and we'll get them on there and we'll start to go through the scenario. And the person that did the tax return will say to me, well, you must not understand ministers' tax returns because the house allowance is not taxable. And then we ask them about self-employment tax, and then they'll usually come back to us in about a half hour, and they'll be like, well, you might want to come back to the office because there might be a problem with your tax return.
We found some adjustments.
Yeah, there might be an adjustment you might owe.
Yeah.
And then the next question is from the pastor to me is, am I in trouble with the IRS? And I'm like, maybe. So I doubt it. I doubt that you would be in trouble, but you're going to have to owe some.
Yeah. Absolutely. Well, as we wrap up this episode, I think just some actionable steps or some things that if you're listening or you're watching, okay, what's next? Well, down below we'll have a link to a form that you can go fill out that'll help you walk through the calculation for coming up with your housing allowance, and we'll have some suggested things to include, things that we've talked about: your mortgage, your rent, down payment on a home, utilities, cleaning supplies, major repairs, different expenses of that nature that can go into that. We'll give you a chance to sign it, and then we'll also provide an opportunity, a space for the church treasurer or the board representative to sign that off as well. So just a practical tool for you. Feel free to share that with friends. Even if you don't like them, feel free to share it with them. It's a helpful tool to walk through how to come up and calculate that number. Something we recommend is it's good practice to update your state and your local tax withholdings each year. It's good practice to go in and update the housing allowance form each year. So if you're a business administrator at a church, I definitely recommend having a conversation with your ministers about, just like they should be updating W-4s each year, they should be updating their housing allowance form each year as well. So that'll be available as a free resource to you in the link below. And as Steve mentioned, this is just the tip of the iceberg. There's a whole bunch of different rabbit trails that we can go down when it comes to housing allowance. And so some of the things we'll be getting into in future episodes are a deep dive into when housing allowance is taxable, right? That portion that gets messed up all the time. We'll talk about should you even take a housing allowance, right? There are plenty of instances where it's like that book When Helping Hurts, right?
Yeah.
It's when housing allowance hurts. So when does taking a housing allowance actually hurt you as a minister, and you'd be better off actually to be just compensated as a regular employee? What are the hidden pitfalls? We'll get into self-employment tax. I know a conversation that when my dad was first getting ordained was opting out as a conscientious objector. Should you opt out? Should you not? Maybe some strategies if you're getting toward retirement and you've opted out and you're staring down the barrel of retirement and Social Security and Medicare is not there for you. What could be some strategies that you might employ? And then lastly, just some real practical advice about how to roll this out to your team if you are a business administrator. So thanks so much for checking out this episode, and we'll see you next time.
Thank you.